Okay, welcome back, everyone. It's my absolute pleasure to introduce the second panel, which is titled AI and the Future of Finance Careers. The panel is moderated by Matt Breitfelder. Matt is partner and global head of human capital at Apollo Global Management, and he's also the chair of the advisory board of the AI Analytics and the Future of Work initiative. Matt is going to be joined by two fantastic leaders in finance. We have Elizabeth Dennis. Elizabeth is Managing Director and Head of Global Client Coverage at Morgan Stanley. And Elizabeth earned her BA here at Georgetown. And we have Ryan Stork. Ryan is the Chief Operating Officer at KKR. Prior to KKR, Ryan served as a Deputy Chief Operating Officer at BlackRock. Please join me in welcoming them on stage.
Thank you so much, Alberto. It's great to be with everyone today on a beautiful fall day at Georgetown. I think we'll pick up the thread of the last session. You might hear a little bit less about agents and a little bit more about what we're seeing in the financial system. It is a pleasure to work with Alberto and the Georgetown faculty on this initiative. I've been involved for about 4 or 5 years, and I have found this work to just be like a living laboratory. I think the world is trying to figure out where are we going with AI and what does it mean to the future of work. We're all running live experiments in our companies, and I think Georgetown's done an exceptional job of fostering the right debates here, really thinking through the implications for companies, but also the implications for you as students and what workforce are you entering. And as Georgetown does so well, what does this mean for society? What does this mean for policy? How do we make sure that it has a positive social impact as well? Which is something I know the three of us all really care about. But we were asked to focus this much more on what does this mean for careers in finance, which is something that I know is on the minds of many people in the audience. We do have incredible representation on the panel with Liz coming from her incredible career at Morgan Stanley and Ryan in the boom years at BlackRock of asset management and now at KKR, the boom years at KKR. So why don't we just start with asking each of you, and maybe Ryan, you can start. Help us understand how is KKR and how are you in your seat as COO thinking about AI in terms of your business strategy, in terms of your investment strategy?
Sure. Well, thanks, Matt. And thanks, everyone, for giving us the time. And I know we're competing against a sunny 75-degree day on a Friday, so thank you for being here. Maybe just to lay some foundation for how we think about this, and we can take this whichever way we choose to. But there's probably 3 areas of focus for us as an organization that relates to AI, and it dovetails from some of the comments even from the prior session. The first is very broadly just raising the AI IQ in the organization, and you could maybe simply say everyone should have access to one or a series of LLMs in the organization and should be tinkering, should be playing, should be asking questions. And there's that quickly dovetails to the second category, which is how are we using these tools to create efficiency and operating leverage in the organization, which also was a thread that was part of the last session. And some of that in that second category is around how do we change business process, how do we re-underwrite an operating model. And I think there probably are some similarities to probably all 3 of our organizations where they are generally, touch wood, all growth companies. And I'll flag one thing that perhaps we can come back to for later in this category, which is, is this efficiency and pace of AI going to reduce organizations or the human capital element of organizations? I'm not sure it does. I would posit that. But it probably does mean that we can flatten out the growth trajectory of the human capital piece over time, which we can come back to. The third leg of that stool for us is really around how we're using AI tools to assist the investment life cycle in our organization. At the end of the day, we're an investment firm at our core. So how do we use these tools, not necessarily to tell us what to either investments or what organizations or companies to buy and sell, but how do we use it to expand the aperture with which we're looking at, let's just say as an example, the private company landscape, to evaluate more organizations with the same level of effort. And then related to that is how do we look at that investment life cycle to speed it up? And speed it up might mean how do we do it for less cost? Of course, it's time. And how do we do it better? So those are probably the three legs of our stool as how we're thinking about the platform.
That's great. A lot of things we can double click into that, but why don't we turn it to Liz. Morgan Stanley, obviously, much bigger company. I think you've had incredible seats running the wealth business and global clients. I can imagine there's a lot to how you're thinking about AI at Morgan Stanley.
Absolutely. Well, thanks for having me. And Professor Rossi did a great job in his intro talking about how AI is actually not new. And I think the previous panel talked about that as well. And so some of the tools that have been using the backbone of AI that we've been using for our financial advisors include email drafting or summarizing meetings and making us more efficient. And then we have a specific tool called Next Best Action, for example, which was really sort of this predictive tool similar to what you see in Netflix of you've watched this show and therefore you're going to like this show, but it was on behalf of clients. So for an individual client, you have a portfolio that looks like XYZ, or you might be at a stage in your life where you're going to be buying a house. Here's a primer on the mortgage market, for example. So those tools have been out there for quite some time. What I noticed, at least at Morgan Stanley, was that our leadership went to the West Coast in early 2022. They met with OpenAI and a number of other companies, and they came back and they said the ability for it to read vast amounts of documents, they put all of our research in there, and come back to us and be able to use it as a tool to make conclusions around what was most important in those documents, and the efficiency of that on behalf of our internal teams was amazing. And I remember that our co-president actually used a little kind of kitschy thing where he spoke at a town hall and he had used AI to write a poem using Dr. Seuss about what he should say for his Morgan Stanley town hall. And what I observed in the room was that there was nervous laughter because on the one hand, of course, it's kind of silly. It's a Dr. Seuss poem. On the other hand, this tool didn't know that much about Morgan Stanley and kind of nailed the actual content of it. What I would observe about the financial advisors and what we're trying to do is we're trying to make everything that we do be a complement to that human advice. Because what has changed, we were talking in the back room a little bit, what has changed about the wealth management business over decades is that we used to be, our financial advisors were really advising on single stocks and bonds. And that was decades ago, but the commissions on that went to zero essentially. And so they really adapted themselves into being holistic financial advisors. So if you think about the relationship that someone, an individual or a family has with their financial assets, it's actually a very emotional relationship. It can cause a lot of disruption in families, not just those that might be struggling financially, but even those that are actually quite high net worth, because you're talking about next generation planning and what to do with a family business and where do we care about philanthropy and giving back. Those are mostly human, very high touch decisions. So anything that we can do to allow our advisors to not have to spend time on mundane operational things and training their teams to send wires or draft emails, that just gives them that much more time to do the human aspect of their job. And I would just encourage you to think about that, as you're thinking about your own financial careers. The human element of that is still going to be really important, whether you're on the wealth management side or in a institutional relationship perspective.
Right, it's really bringing the best of humans and agents together. Could you just tell us a little bit more about the Next Best Action tool? It's pretty interesting.
Yes. Well, yes, I can. And I will also say it actually parlays really nicely into something we announced just this week with BlackRock. So Next Best Action, it was a tool that started, I would say, maybe 7 years ago. And it is an algorithm that takes all of the information that we had been sending to clients It analyzes the adoption of those, the readership of those emails. And it also does predictive analytics around the archetype of the client. So we have 19 million retail clients, individual clients at Morgan Stanley. We bought a company called E-Trade, which is our self-directed platform, as well as our employee engagement team in the workplace strategy. And so across those 19 million clients, as you might imagine, there are very different archetypes. There's everything from a self-directed client that never wants to talk to a human being to very sophisticated family offices that have 100 employees just in their family office and need a very high-touch model. And so that next best action tool was really helping us synthesize the information and then delivering what was most relevant to the client. What we just announced with BlackRock is leveraging a tool that they have called Aladdin, which is a risk analytics tool, and it's been around for a long time. Morgan Stanley's been an early user and power user of it. But what's interesting about Aladdin is it was built for institutional investors. So it's actually very high octane and not very easy to translate for an individual investor. So if you're a portfolio manager at KKR, you're going to know, or a hedge fund, you're going to understand how to take a big risk analytics tool like Aladdin and use it. But if you're an individual investor, you might look at this Aladdin tool and say, I don't really know what to do with this information. What this new tool that we just announced that came out with BlackRock is basically giving the financial advisor the bullet points from the analysis of that Aladdin tool to say, this is what I synthesized out of that tool that is most relevant to your client, so that you don't have to try to interpret it yourself, because some of the financial advisors are very sophisticated, but they may not know every detail of that platform. And it's kind of like Bloomberg in a way. Bloomberg is a very sophisticated financial tool, but you could spend a lot of time trying to learn all of the different prompts that you need for Bloomberg. Now you can just type it in natural language.
That's incredible. And Aladdin's got, what, over $20 trillion on it now?
That sounds right, yeah.
Some very large number like that. Ryan used to run the Aladdin business, but it is fascinating. It really is a great example of what we're talking about. Because if BlackRock has analytics on $20 trillion, and your wealth advisor sitting in Des Moines, Iowa,
Yes.
now has this next best action tool that can take all that insight and make it really digestible for them to explain
Exactly.
to a wealth client.
And Aladdin is, when we say risk analytics, what we mean is where are there hidden concentrations in your portfolio that you may not see because you're in one fund and then you're in another fund and you don't know that you necessarily own a larger number of growth equities than you thought, or a certain single name concentration, or a fixed income, or what's your exposure to interest rate risk as an example. All of that is in this tool, but you kind of need to learn the tool before you can use it. Now with AI, you don't really need to learn the tool. You don't need to do an hour-long training on Aladdin. You just say, hey, Aladdin, what is the risk of interest rates to my client's portfolio? And it gives you the answer in a human language.
Wow, that is so cool. Well, I'm going to ask a number of other questions, as many as we can get through, and then we're going to open it up for you, and you can choose where you want to go deeper. Ryan, you mentioned AI IQ. So everyone in this room, we're all focused on our AI IQ, but we might not be focused on it in the best, most intelligent ways. And I think every company is trying to figure out, how do you do that the right way? How do you put the guardrails in place? What tools do you give people? How are you approaching that part of what you discussed earlier?
I think there's a few aspects to this. One is at a leadership level in the organization, we're spending lots of time, and we do sort of challenge ourselves. There's this sort of fear of missing out. Like every conversation I have with one of our peers in the industry, including Matt and his colleagues, most of our conversations are around like, what are you guys doing around AI? And like we're missing out. And I think we were actually having this conversation in the back of the room a few minutes ago, where the technology is moving so fast. And sometimes there's aspects of our workflows, whether you think it's AI to support the client life cycle, AI to support the investment life cycle, or how we use AI to create efficiencies in how we run the firm, there's ebbs and flows. There's always going to be times where we feel like, wow, this is really clever. We feel like we are at sort of a cutting edge in what we are experimenting with or delivering. And then there are days you wake up and you're like, man, we are so far behind. So there's this constant anxiety around the pace of change. The one thing I would say is, to your breadth comment, Matt, is yes, we are trying to elevate the understanding across the whole organization, which we should do, because it also creates better questions, more curiosity. As I was reflecting on some of the comments from the other session, it also blurs the lines across functions, which is not a bad thing, because if I'm using a tool or an application that my investment teams are using, which is helping them discern what companies they should be acquiring, I can have the same tool be used by your distribution teams. So they're now co-collaborating on the types of executions and or understandings of the types of investments we're making across functions. So there are some secondary benefits to making sure we're, rising tides lift all boats in some respects. That's happening. The other aspect of this is, just use the investment example for 1 second. Much of those workflows and those applications are using specific tools that go very deep. And also, as I was listening to the earlier session, the ability to write sophisticated prompts is changing pretty dramatically. And in some cases, these prompts might be pages and pages long, where there are individuals in the organization who are both fascinated but also very skilled at writing very complex prompts to solve difficult investment-type theses. That's not everyone in the organization, but that sort of sharing of this might be relevant to a specific investment strategy, say in private equity, but is it relevant or could we use it in the context of our asset-backed finance team? And sharing that knowledge in those prompts is one of the ways with which I think we're accelerating the depth of that knowledge base in the organization. I was at a meeting earlier today, and someone asked a similar question at lunch. And I said, back to the broad AI comment, I said, it's sort of like learning a language. I said, for the first 3 months of learning language, it's super easy. You're memorizing stuff, it's really exciting. And then you have to actually really get into how will I actually speak this language, and it gets really hard. In some cases, you're like, that's too hard, I'm not doing that anymore. And some of the, I think, experimentation with AI is making sure everyone feels like, even though sometimes when you hit those walls that it's hard, you got to work with your colleagues and keep leveraging to keep experimenting. And I think that's, in some cases, where the breadth of the education is helpful, but we're also trying to expand the depth of how the organization is using the tools.
I love that. At Apollo, we've used the phrase with our people, disrupt yourself. So you got to give the guardrails. To your point, it's about use cases in specific areas, but we're also just saying, improve your AI IQ, and then we want to have a flourishing from the grassroots of what are the things we haven't thought of. And I think you balance the bottoms up with the very specific applications like what Liz said. And I empowered someone on my team to do that. And I said, just try some stuff. Like, let's see what you come up with. And she's responsible for helping me give the many presentations I give in any given week. And so she helps me put the materials together. And after like 2 weeks, she said, I've disrupted myself. I created the map bot. And I said, excuse me? She said, there's a map bot. We put everything you've ever said in the 6 years you've been at Apollo into the bot. And so when you give me these requests, the bot writes your stuff for you. So 50% of my time is now available. What would you like me to use it with? Because the map bot's really good. And it took me a while to digest how strange that was. But she knocked my socks off because she was basically like self-funding her own capacity and taking control of it. And I think, as the last panel said, this can't be a moment driven by fear. This should be a moment driven by empowerment and agency. And here's the problem we're trying to solve, and how do we unleash the creativity of our people to do that? I think that does lead into the next topic, which is back to our Georgetown students, of great interest to them as they think about their careers. How are each of you thinking about which skills are most critical for young professionals at Georgetown to be focused on? Are you betting on technical fluency? Are you betting on creativity? Are you betting on judgment? And how has that changed, or how do you expect that to change in the next few years?
I would say that the skill set that you're interested in related to AI has to match somehow your broader skill set. So if you are not an engineer and you really aren't interested in that, it would be somewhat unnatural for you to just go try to learn that. You could do it, obviously, AI lets you learn anything, but it's not necessary. What you want to do is match your skills and interests with what might be relevant to AI. So the example that you gave, Ryan, around prompting, when we did a session with our head of AI recently to MDs at the firm, all he asked us to take away was how to prompt the AI. He wanted us to focus on the exact ways that you prompt AI and that you keep a database of your prompts, and this concept of just using natural language most effectively was really all he cared about. And that plays into a lot of the liberal arts background of Georgetown. If you're interested in law or ethics, that came up on the last panel, or governance, there is definitely a new, kind of, I don't know if you call it an industry, but a job title or creation of groups that need to be smart around the governance of AI. And for financial services, we're one of the most regulated, especially at banks, less so at alternative asset managers, but we're one of the most regulated industries. And so we need folks that know the rules around the regulations and the governance structures. And so you mentioned, the ability to have hackathons and have all of these different use cases for AI, which we do, and we encourage our teams to bring all of those opportunities to the front. But we also need to know what those guardrails are. And we are big believers at Morgan Stanley that we are always going to have a human both in the front end and the back end, meaning helping create the prompts and the tools, but also monitoring them over time. We are not at the point at all, at least now, of letting them make the decisions and freewheeling. We definitely want humans involved across multiple steps.
Right?
Yeah, I would. It's not a widely different response. I think that, and if I'm sitting in your seats thinking about what do I want to do with the rest of my life, I don't think it has to be as stressful. What if I pick this function or this path or this company? Can I change? And the way I would play this back is I've talked a little bit about how we're using AI for investments, but how we use it in our client and distribution functions is equally as important. I was just in our office in Gurgaon, India last week, and spent time with the legal team, the compliance team, audit, operations, technology, and every aspect of the organization was applying AI in some capacity to say, here's how I'm, to your example of the Matbot, like here's how I'm doing making my job easier, giving me capacity to think. And those aren't specific to you must have a major or you must have a specialty that looks like this. And I would say no matter what you want to do is your industry, profession, what you want to do with your career, there will be an application for AI for you to experiment and do that job in I think in a more efficient and scaled way. So I think I could look to every capacity of what we do, and it is almost function agnostic, but there's an application where it can help us be a better organization.
That's great.
Is that different for you at Apollo?
No, it isn't. And I actually think what you just said is similar to what was said in the previous panel of let's move from like a boil the ocean overselling of what this is, and let's try to get very concrete. So I'd connect the dot between your comment and the idea that the narrower agents are going to be the better ones, and there's a lot of failed agents that are trying to do too many things. And as an HR person, I really like the mental model of these are literally agents that you're designing in an org chart, and you're actually trying to optimize on very specific pieces of work. That makes a lot of sense to me that I can bet on that. The idea that everything's going to fundamentally change, like I'm open to that, but I don't know how to take action on that. Right. Versus to your point, okay, what specific things are we doing in HR, in recruiting? Do we believe that's going to be net beneficial or not? Yeah. And I think going function by function, or what you just described on the wealth advisor, is super powerful.
Well, and I think I would say that it's not so much a skill set, but it's a mentality shift of if you've brought a piece of analysis to me, and you haven't thought about how AI could have done that differently, then I am going to start to get frustrated because it just shows that you're kind of not having that growth mindset. So I think you have the benefit of, if you're going into the job market now, of having a different mindset around this and not having the baggage of having done stuff a certain way. And it takes time to get people to sort of operate in that manner, but there are going to be higher expectations around the pace at which things happen also. We used to kind of say, well, we're getting data from all these different places, it's going to take a little bit of time. Now the expectation is you don't really have that excuse anymore. We can, if I'm preparing for a bunch of senior leadership meetings where our C-suite is going to meet with clients, my team should be able to get information on those clients almost immediately because it's all pretty available on the data sets that we have.
Right. That's interesting. I mean, Ryan and I both worked at BlackRock together, and 10 years ago, we saw this coming, and the answer 10 years ago was only hire people who know how to code because everyone's going to have to be able to code. It obviously has completely changed where now the opposite is true, but we were trying to kind of solve roughly the same problem, which is what do you really need to bet on in this era? And I think what you just said about growth mindset is really important because we're running this live experiment and some people are embracing it and diving in and some people are resisting it and some people can sometimes say, oh, that's the tech team's job, they'll figure it out. And what skill do you think, like if we just come back to that we're really betting on, because I'm listening to you saying, is change agility today what learning how to code was 10 years ago? Like if you had to try to articulate, and we're all recruiting people all day, every day in our companies, are you seeing a pattern there? Or
I would choose creativity if I had to choose, those aspirational goals. I was talking to someone at Georgetown earlier today, and we were talking a little bit about the admissions process. And you have all these analytics that tell you the scores on standardized testing and all of that. They were talking about some work that might be done on the psychology department side of how can you analyze essays for creativity, and can you have sort of this dual analysis of a person around both their quantitative and statistical metrics as well as their creativity. And what has changed, the advice I usually give to people starting in their career is don't report the news, right? And that sounds so arcane at this point because no one would do that because that you have to have a point of view and you have to analyze the information. But in the past, your value as a financial person, whether you're a financial advisor to an individual or someone advising on an IPO, was almost to tell them where their stock was trading and what was happening in the market. Now that would be ridiculous because everyone has that information readily available to them and it's turbocharged with AI. So your ability to have a point of view, to think of something from a different perspective might be the only thing that a client will ever remember because everything else is sort of noise or table stakes, if you will.
That's amazing. Ryan?
We had a principal on one of our investment teams present to the board last week in Asia, and our board is obviously it's quite adept. It's got some folks who are quite technology heavy on the board, but here's someone who's been in the organization a handful of years talking about how the investment teams are using technology to make better, smarter investments faster. And I was just sitting listening to him talk about how he's using the tools, and it speaks a little bit, Matt, to your comment of like, this isn't necessarily a 20-something, it is opportunity, but solely. And for us, and thank you for saying we didn't work together for 23 years, which we did. God, it made me feel old. But all of us need to embrace this change. And whether that is because I can learn a whole lot from someone who's been doing this for a handful of years, tremendous. But also, we also need to experiment, and that's back to the raising the understanding across the whole firm. But I agree with you, Matt. It doesn't have to be investments per se, but find your lane that you find interesting, and then find a way to apply the technology to do the job better, faster, as I alluded to on the investment side. Those are the things that I think we should think about. And Matt's right. I think whether it was a decade ago or longer, it was your ability to write code that was one of the things that we were after from a talent perspective. And interestingly enough, there's lots of tools that I'm sure many of you know that we're using that they're just helping us write the code for us. So in some respects, it's like I almost want to hire great architects of problem solving and operating models because they can have the technology help them write the code and or check the code and or write it faster. So yes, the landscape's changing, but I think those are the types of skill sets that people that are intellectually curious about the things that they really are interested in, more so than I need someone with a specific major.
Mm-hmm. Yeah, you're almost saying, decide you want to focus on a craft and just be obsessed with being amazing at that craft, which gets to your creativity point, and then you just see these tools as, I'll do anything to be better and better and better at this thing.
Yeah.
Okay, we're ready to open it up for questions.
Hello. Thank you guys so much for coming. I really appreciate your time. This has been a fascinating topic for all of us. So my question is, 10 years down the line, there's obviously a shifting global order. In your opinion, what are some of the challenges and opportunities that the current AI technology can bring to the financial industry and in your role in managing human capital and financial capital?
Thanks for the easy question.
That's a big...
You couldn't ask me what my favorite color was or something like that. Okay, since I'm talking, I'll take a run at it.
You're going to do great.
Yeah, thank you for that.
You got this,
and then we'll move on to the next question. It dovetails to where actually one of my opening remarks, which was, as I think about, or I'll answer it to KKR specifically. Thankfully, we are a growth company. And as I think about what will the shape of the organization look like and where will we do work around the planet, i.e. right people, right seats, I'm also trying to think through, there's investments we want to make in that technology to support a client, to support an investment, and to run the firm. And if I can make those investments, in essence, self-fund them, that's how I'm thinking about how we build an ecosystem that, creates a great experience for our clients, but also creates a great experience for our shareholders. Now, I didn't solve your existential world peace part of your question, I realize, but I think that's how if we can create a good experience for the people that work at KKR, and I can solve those problems in our industry, those are the things that I'm thinking through front of mind. What will we look like in the next 5 to 10 years? I will tell you, we're a 49-year-old firm about to turn 50 years old. And in the last 4 years, we've essentially doubled the size of the firm. And that's pretty extraordinary from a firm that's had 45 years of extraordinary performance in history. To then say we've doubled, to then say, well, what will the next 5 years look like? And if it doesn't involve the technology changes that we're talking about, we will probably struggle to absorb that growth. So I think those are the things that we're thinking about, making sure we make those investments in a thoughtful way.
Go ahead.
Thank you for your question. I'm thinking about an image that we had of our summer analyst class that was 1,500 people from across the globe that came to New York. They were the only place that could accommodate 1,500 people was the Intrepid, which is a huge boat on the Hudson River in Manhattan. And I had the privilege of speaking to that class. And it really is inspiring when you see, new people entering the job market from around the globe and thinking about how they're networking with each other, how they're learning about their, the businesses that they're going to be in for the summer. And it gives you a lot of optimism and hope that we at Morgan Stanley, we are 100% always going to be investing in our human capital and making sure that even, those summer analysts, when they come on board, they're not the most productive people. They're not there long enough to really move the needle for our business. But but we're investing in them because we know that they're going to be the future of the firm, and that's our legacy. Like, we will always do that. If we ever stopped doing that, I don't think we would be the firm that we are today, and we wouldn't be able to serve clients the way that we do. And the ability to raise, manage, and allocate capital across the globe really does create change. I mean, we're financing data centers as an example. That is going to create massive change around the world and be part of that global world order, if you will. And you need asset managers and allocators of capital to help do that. And it's, as for you or people thinking about going into that industry, you should just know it's pretty exciting and dynamic.
Thank you very much.
Hello, my name is Jeff. I'm with the Executive MBA program. And I had a question. Earlier we heard from our tech giants, excuse me, about how their agents was really helping with speed and efficiency. That's the name of the game in big tech world. But in the financial sector, you guys do not have the same risk appetite as big tech has. So how are you guys managing the drivers that big tech is sending out to the world of speed and efficiency with these bots or agents? And how does that play with your risk palette? Is it staying the same? Are your risks able to then maneuver up and down, or are you guys what is your guys' thought or perspective around what your risk is as these new AI agents come online?
It's a very interesting question, and the business model of Apollo and of KKR is actually interestingly similar, that we're in the insurance business and in the investment business, and through private equity, work with a lot of different types of industries at the same time. I would say we're very deliberate about how we think about risk for the particular task that you're trying to perform. And with the visibility we have, or Ryan has at KKR, I think you're always experimenting with the best available tools. And so you always need to know what they are. And you'll see them applied in lots of different contexts and circumstances. It's interesting because I think in the private capital space, we're known for being very fast moving and very innovative. And so I think you actually see a similar level of adoption and innovation in financial services than you would see in the Valley. It's actually not that different. And we're actually very close sister industries who spend a lot of time together. I was out in the Valley last week, and we're all working very hard to be cutting edge. So I don't think the mindset is actually that different. And I do think there's something so important from the tech industry that we all benefit from, which is the whole idea of test and iterate. And you can simultaneously have boldness in how big something could be, but a lot of humility on what is the data telling you. I think the way we solve problems at Apollo is very similar to how technology companies operate.
Well said.
Thank you.
Hi there, my name is Caleb. I'm with the Flex MBA program. There's been a lot of great discussion about things that you can control within a firm or things that we have some agency in industry. Could you describe the non-market environment? What do you see as the role of government, both domestically and internationally, when it comes to R&D investments, things like regulation, particularly in the financial services? It's a very regulated industry. And then just more broadly, economic development. Thank you.
Well, I would start, I thank you for your question. I mentioned the regulation of the big banks, and that is a big part of regulatory affairs and the way we make sure that those stakeholders are informed on what we're doing. I've met with the regulators recently, and they want to know, in depth kind of how we're thinking about AI as it relates to data intelligence and serving clients. But there has been a shift in the regulatory environment around the globe that is making it a bit more streamlined to do business. And that narrative that is as you said, interfacing and working with the big tech firms to make sure that we're all evolving as quickly as we can is quite important. And so I think there's a perspective now that we want to make sure that we are doing it in a very thoughtful and with all the right guardrails, but that we're moving quickly as well.
Yeah, I'd posit one more thing, which I think Liz well covered the regulatory component, but I think perhaps probably in all of our organizations, the lines between public market and private market are blurring from an investing standpoint. And what we thought was clearly a private asset a few years ago is increasingly, whether it's accessibility or just our definitions, things like infrastructure or infrastructure debt, as an example, feel more mainstream and public than they maybe did a few years ago. So those lines are blurring. And even some of Liz's comments around an institutional investor base versus a wealth base, the wealth channel is becoming far, far more sophisticated in its portfolio construction and its asset allocation. Part of that is access. Part of that is even the tools that are available to them to think about their own investing requirements in their lifetimes. So all of that is causing all of us to think about not just how we construct portfolios in an institutional context versus a wealth context. They're more similar than they are different today. And that's having a burden on our tools, how we service. Liz talked about the size of Morgan Stanley's wealth franchise, which is extraordinary. Like, all of these require real infrastructure to support and an increasing education and dialogue with regulators, not just here in the US, outside of the US, around how we can facilitate support of public and private or institutional and wealth.
I think another reason you're all lucky to be at Georgetown, because this is a transformational period in our industry as you think about the future of investing and retirement, all the things we lie awake at night worried about. But also government's got big decisions to make about the role that government wants to play in AI in this next phase. Okay, I think we have time for one more question.
Hello, my name is Andrew Fang. I'm actually an adjunct faculty here. And I'm going to probably float a less rosy aspect of AI, because when I'm dealing with the younger generation, there's a heavy reliance on AI in learning, doing homework, doing research. So the simple question here is artificial intelligence make us dumber? Let me explain that a little bit. There are two aspects. One is kind of offloading the critical thinking skills. If you don't have to struggle through a problem on your own over time, then just go to AI tool to get the answer. That's one. Then the second is kind of related to that, is skill degradation. Just like you use GPS a lot, but you probably don't remember how to go from A to B anymore. So I'd like to hear your perspective. Thank you.
Great question.
It's a great question.
I know. This is getting very personal.
Yeah.
I feel like you're watching me drive.
And I promise we're not going to bring the room down on a Friday afternoon. But it's a fabulous question, and I'll just give you one data point. I'm sure we all have views on this. I was actually having a conversation with our Chief Information Officer only a few days ago around this very topic, because I share a concern that if I give everyone, pick your LLM, they can just sit in their office or in a cube and bang on a keyboard, and they don't have to talk to anyone. And that actually does worry me, that it will dim the light of collaboration that I want to foster in the organization. So it is going to require us to be real thoughtful about how we use, at least in the early-ish days, the curiosity of what the models and the tools and the platforms are telling our people, because they're truly just tools. Like, unless you're going to educate yourself on how to use them and then share that knowledge with your peers, which as an organization, we are obviously strongly encouraging. Like, at least now, I feel okay that collaboration is continuing because people are genuinely curious. That's terrific. But it is I don't know if I have anxiety over it, but it is something that we should all be thoughtful around, because I don't want people not sharing that knowledge base or not engaging with their peers.
I would just add, I mean, I can tell when something has been written by AI, and I'm sure as a professor you can see that as well. And so what makes you special and interesting is the way you put a human lens on everything. And the interpersonal skills, like if you were to ask me, what should I focus on as I think about my career, I would really encourage your students to work on their interpersonal skills, whether that's debate in the classroom or challenging each other, going to a dinner and being able to have a lively dialogue at dinner. I mean, these are the things that are going to make humans unique, and they do make humans unique, but you can't do that with a bot. And it is part of the business of relationships as well. We're in the relationship and trust business, especially for people advising folks on their investments. The trust and human element of that is really important.
I would just add one point. I'm basically a professional executive coach, and I get to work with some of the most successful people in the world. And it's really interesting that the most successful people are a little bit humbler than the slightly less successful people, and they tend to have a plan and be very intentional and very clear with high self-awareness of what they're good at and what they're not good at. And my biggest advice to anyone in the room is, if you do not have a plan of what your superpowers are and exactly how you're going to continue to curate them, then you're behind. So it's really important to be clear about where is my personal contribution and competitive advantage coming from. I worry about exactly what you're worried about. I'm the father of a 17-year-old daughter, and I keep saying to her, tell all your friends to be careful, from the dad who works in HR and may or may not recruit them, that if they outsource what could make them special, just because you can doesn't mean you should. If you do that, be careful. You are playing a dangerous game of accomplishing one task or one paper you need to get done, instead of actually keeping the most valuable skill that you have. And you need to have a plan, and you need to be very clear about that. Universities and schools are, I think, doing a good job trying to figure out what are the guardrails to that. And they need to. It's really important. But the self-management of that, it's a short-term, long-term problem. Like, which game are you playing? Are you playing the game for long-term greatness, which is the only game any of us should be playing? Be very, very deliberate and intentional about it. I'm with you.
Thank you.
Okay, I think we are out of time. I just want to thank Ryan and Liz for an amazing discussion. It's been such a pleasure. Thank you for coming to spend some time with us at Georgetown.
Pleasure.
Thank you so much. Thank you so much for the phenomenal panel, and we'll reconvene in 10 minutes for the last session on quantum and the future of AI.